Welcome to VC React podcast, where we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, investment rounds, acquisitions, and tech IPOs. Our VC guests today are Youssef Shehab, investment analyst at Falak Startups, and Zeina Mandour, investments manager at Dar Ventures. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, the #1 news aggregator that sends you MENA startup and VC news directly to your inbox twice a week. And as always, from FWDstart, we have my co-host, the good morning, guys, Jamie.
You know
What's
what?
happening this week, Jamie?
I've been practicing all week as well, trying to not say good morning, and you've gotten in ahead of me now.
You're stuck with that.
You've taken my opening line. That was going to be my joke. I can't believe this.
Okay.
I don't really know what to say now. I need to go off script. Give me a couple of seconds here till I find where I'm supposed to be. But in any case,
it's always good morning some way, in the other way, like say.
Always. Yeah, I can't believe this. I'm
Okay,
thrown.
for our new listeners or watchers, we record this on Thursday mornings and we publish it on Thursday night.
All right. Well, look, let's get kick-started this week, Ahmad, in your neck of the woods, if we can. So we're going to start with what I find a tongue twister. And again, this is something that I've been practicing to say as well, which is the ISSF, which stands for the Innovative Startups and SMEs Fund. I think I did pretty well there. So that's Jordan's largest investment fund of its kind. They've announced a $5 million investment in Global Ventures Fund 3. So just a small bit of background about ISSF. Established back in 2017. It's a $98 million fund. It's a partnership between the Central Bank of Jordan, who contributed $48 million, and the World Bank. They've contributed $50 million. So supports Jordanian early stage startups and SMEs through investments in VC funds and direct startup investments. They've directly invested in 24 startups, I believe, to date. So notable ones would include edtech platforms like Abob and Little Thinking Minds spring to mind. And they've also invested in 17 funds. So this year to date, they've invested in MSA Novo's MENA Fund, Propeller Ventures 2, and Venture Souk Fund 2. With regard to their partnership, I suppose, with Global Ventures, this is actually the second time that they've contributed to a fund of theirs. The earlier one being their second fund, which I believe is back in early 2022. I think it was January 2022. A small bit about Global Ventures as well while I'm at it. A UAE-based VC firm focused on Series A investments in emerging markets, particularly Africa and the Middle East. 300 million in assets under management. They invested in 60 companies across 10 markets in that time, focused on sectors from supply chain to agri-tech, essentially anything that can have a positive impact, I suppose is what you'd say. So they've been mandated by ISSF to invest in Jordanian startups. They have invested in Jordanian startups in the past. I think the biggest one that springs to mind for me is Al Tibi. So they're the UAE-based but Jordan-born digital health startup. So they raised a 44 million Series B round back in 2022. In terms of investments that Global Ventures has made to date in Fund 3, we have 2 disclosed. One of those is Amensa, an additive manufacturing startup based in the UAE, and the other one is Melexi, a risk management platform that we're actually going to be talking about a small bit later as well.
I think actually having any sort of news of investors in general putting money in funds and doing or new funds launch with whatever it is, the first or second or third, it is good for the ecosystem, because the more dry powder there, the more the people will support startups. Because especially if you look at the numbers, I think something we can discuss later today is the numbers is somehow there's a correction in the market. I don't think there's an issue in the dry powder anymore, but there's the merrier, let's say it this way. But there was, when we compare things between 2020 and 2021 and now, the market is leading towards a correction in terms of how the investors looking into startups and all of that. So people felt maybe the VC is not becoming any more attractive, but seeing news like no, actually still such big funds willing to invest and allocate big tickets for even the Jordanian market or other markets and expanding, because now global ventures is expanding. And as far as I understand, the fund, not only MENA, is going to Africa as well, which is now it's a new topic. And you can see a lot of funds are dedicating time for Africa because this looks like a lucrative opportunity as we speak, specific to sectors like fintech and things related to infrastructure ideas, give more confidence into the market. It signals that no, even if things looks like slowing down, it's again correction, not that there is a low appetite at all. People are restructuring their investment thesis. We can see that. We can see new sectors coming. Like when we look at, for instance, global ventures, they're looking for things related to prop tech, looking to a new segments that this is becoming attractive. I think this is me as an investor and even the founders, it gives a good signal to international as well, because this is something that we have seen that maybe international started to shy away from the markets, but when they see the local confidence from big funds putting money into the market, because they understand the dynamics, they understand the trends and how things works.
When a VC fund is taking money from a sovereign wealth fund or a government mandated fund, they take, for example, ISSF is from Jordan, and it's mandated to increase the number of startups, jobs in Jordan. So Global Ventures is now mandated to invest, I don't know if all of that amount or a percentage of that amount in Jordanian startups. And I don't know if it should be Jordanian startups in Jordan or Jordanian startups in general, wherever they are. How limiting is that? And you mentioned that Global Ventures is expanding to Africa and some other countries. But this investment, is it limiting them to Jordan?
Like I said, we were not sure about the dynamics or how the limitation it is. But even if it's only, let's say it is limited as founders Jordanian investing in Jordan. Again, it's part of a bigger portfolio structure. When any fund manager and GP does that, they look at markets, and the whole point is diversification. So definitely when they put, because like this is not the first time they interact with the ISSF, and it's not the first time to look at the Jordanian companies, and we have seen a very successful companies coming from Jordan. It means they understand the market, and this is part of the portfolio mix when it comes to the country. Because when you look at the fund, there's a strategy related to the stage, the sectors, maybe even the business model. We started to see it's no sector, it is a business model focus. This is part of the thesis, we see it. But on top of that, the countries. So I think no, it will never limit. I think it makes sense, and it will not be limiting whatsoever to Global Ventures. And definitely they know better, because this is where they went to the ISF at the end of the day.
Makes sense. Youssef, your reactions?
Yeah, I think especially building on the point you said about it, whether it's limiting or not, I'll echo what Tamer Azur said last week about the idea that governments, like it's regular for governments to request that for funds to invest in their country. It makes sense, and I think it's quite fair for them to ask that. I think what's interesting about the news, especially, is that Global Ventures usually invest in like growth stage startups, and like Zeina said, it's a smaller fund, so ticket size is probably going to range from around 200 to 300, which could be in and around the seed stage, maybe pre-series A stage. So it's interesting to see Global like taking accepting this fund to invest in Jordan only, especially because Jordan, most funds that they like most of the funding that happens in Jordan is usually early stage, so around seed stage. So I think it's interesting to see them take this direction. That's purely based off an initial reaction, but I think it's very exciting news, to be honest. And I think with Jordan, it's the past, like since 2018, I think they've been like year by year they've been receiving more funding. Startups have been receiving a lot more funding. So I think especially seeing like the ISSF getting like such a big fund from the World Bank and getting support from like support internationally, it's interesting to see how Jordan will start like the VC ecosystem is going to grow in the next coming years. And I think potentially they could be knocking on the door of the big three in Egypt, UAE, and Saudi Arabia like pretty soon. And especially because they have everything, like they have the tools in place to start growing even more. And they have the back from the government. The government is supporting they're supporting and trying to implement policies and initiatives to like attract more investment. Most of their companies, like a very high percentage of them, are SMEs and startups. So their ecosystem, like it's all in like in general. I think it's very supportive, and like it attracts investment, and I think it's very positive news for Jordan, like going forward.
Yeah, and I really like what you said, the focus on growth stage, because in Jordan, we're known for our early stage investments, right? And we have a lot of companies coming out of Jordan, and then when they become growth stage companies, they either move to Saudi or to Dubai or somewhere else. And now it seems that ISSF is trying to keep those companies here, maybe, by bringing in growth capital to the country.
At the end of the day, how big is the market is, yeah, definitely Jordan is a great market, but it has its own limitation like any other market. So I think having a growth stage funds that they have presence in other markets will help the companies. They give them enough money to be able to grow within Jordan, but at the same time, it will help export this knowledge and this actually know-how and the product to other markets as well. I don't think the migration happens that the Jordanian companies will not go anywhere to Saudi or UAE or anything. They will go as a service, not for a fundraising now. So we'll be able to have the ability to fundraise from the local economy because they have the ecosystem for them, but at the same time with access to other people, because we see a lot of startups, even in Egypt and other markets, they go to a Saudi investor to simply to help them launch in Saudi.
Just to let founders learn more about the VC model, because our audience is a mix between founders and VCs. So we have Zeina from a corporate VC fund. So Dar al-Handasa created a VC arm. They called it Dar Ventures. And we have Falak. Falak is an accelerator program.
It used to be an accelerator program. Then we've shifted to like a direct investment VC. Yeah.
And funded by Egypt Ventures, right?
Yeah.
Yeah, okay. So we have different kinds of VC firms and different kinds of LPs. How do LPs measure the success of different kinds of VC ventures?
From our perspective, again, as a corporate, I would take a step back. Why corporates actually launch venture capital? Because it's normal for a financial or a financial institution in a way or another, they invest and they do that. The reason that corporates do in general for multiple reasons, definitely financial returns. So we're not doing it for the greater, it's part of it, the greater good, but it is definitely part of its financial return. Second thing, it is when you are big and actually, being proud of DAR, because DAR founded like a group company called Sudara, and us as a group, we are from the top 10 globally in the EEC space, which is architecture, engineering, construction. So we are a huge conglomerate across the multiple markets. But because of the nature, how big we are, and the innovation within the organization as well, and we are proud that started as a startup with multiple people, and now after all of these years, they see it with this magnitude. But you need to help in accelerating the digitalization part of it. We innovate and we build products in-house, and the idea of investing is not new, but they are more of acquiring an M&A structure, but doing the minority small stakes. This is something not something that they have done before. But what's the idea is to actually stimulate the market, because innovation is quite important, and when we look at the built environment as a whole, even it is the biggest asset class owner globally, still it is the least digitalized sector. So it makes sense for DAR, because they've been leading the innovation within the architecture and engineering and design part. They wanted to lead the tech part of it as well, because being a leader, it required that you help and stimulate the market from a digital perspective. And this is why, on top of the financial return, that we helping startups, it doesn't have to be per se within our domain 100%, as long as within the sector or the value chain, which is eventually it will give us insights about what things that we could enhance, because we are too big, and when you see different ideas and easily to be implemented through founders and startups, and we could adopt them. How we look at opportunities are what sort of expectations that we all, and this is actually part of the investment memo when we work on any deal. We always ask what we're looking for from this. A, it is a normal investment that I want to exit like any sort of investors, and we will help and we will grow. B, this is an investment that potentially I might acquire, but I'm just starting and I work on it and see how it works. C, this is an investment that I will not acquire, but I want to maintain to have a strategic part of it. Okay. And the three scenarios, when I come, I know what is my value. My value is not only about money. This is when I communicate to the founders. This is something that this entity will bring. So we are a subject matter expert. We'll connect you to whatever know-how we have. We help you to accelerate and build your product, and we help you to give you the insights.
Especially in your own industry. And many people maybe don't know that, but Dar al Handasa, which translates into the house of architecture or the house of engineering, it's one of the biggest architecture company in the Middle East, and it's a global one. They started acquiring companies since the 90s. If you read the story, it's an amazing story. The company started in the 50s. And they went global within almost no time. Youssef, how do you see the relationship between your own LPs and the company, and how do they evaluate the success of your investments?
Yeah, so definitely financial returns, like is always a factor, of course. But I think with Falak, it's a bit unique because, like I said before, like we used to be an accelerator and shifted to a VC model. But the idea was when we shifted this VC model, we still want to implement a bit of the accelerator model as well. So whenever we're like, every call I get on with any founder, I always say that yes, we provide capital, but our main like sort of edge is that we focus on more than just one pillar of capital. We focus on distribution and we focus on talent. So we're in constant, like if we invest in a startup, we're in constant conversations with them. We try to have like weekly calls, like weekly, like regular calls, quarterly, like meetups. If it's at their office, if it's by Zoom, we're always trying to make sure that we're fulfilling like all their needs. So if they need any potential investor intros, corporate intros, any, because we're like part of we're owned by the government. So if they need any intros on the regulatory side. We always try to like we help with capacity building as well. So potential partnerships. We have a very wide network of corporates. So like that's usually the edge that we communicate to our startups, and yeah, it's and especially with the talent side as well. Like we have several partnerships like with different talent agencies. So whenever any of our startups wants to hire someone, we always try to help out with that. We're trying to implement like a platform on our website where people can sort of post if they have any like job openings. They can startups can post on the platform, and then people can apply through the platform. This is still like in development. So as much as like, of course, there's always going to be a focus on financial returns. Falak is highly focused on like capacity building and impact in general. And another way that we constantly measure our success is through like the Sustainable Development Goals. So we look at different SDGs, and we like based on these goals, we try to set how we're gonna like shape up like the next year. Every year we try to see like what we've achieved, or like if our investments match the Sustainable Development Goals. So yeah, it's as much as it focuses on financial returns, a very, very big portion of it is also on impact as well.
Jamie, what's our next story for today?
Yeah, so next up, we're going to be looking at two different Indian companies. One is a VC firm and the other a crypto exchange, expanding their international presence, but doing so via the MENA region, which is quite interesting. So the first of those is CoinDCX. So it's India's leading cryptocurrency exchange. It's unicorn, I think it's valued at 2.1 billion. It's acquired BitOasis. So that's a digital asset platform, the leading one in the MENA region. So as part of the acquisition, no financial details have been disclosed. So I'm not entirely sure what the story is as far as that's concerned. But I do know that CoinDCX, they invested in BitOasis last year. So this acquisition follows on from that. As part of the deal, the BitOasis team joining DCX, they're going to retain its brand and leadership. So it's going to operate sort of relatively independently from that perspective. In terms of CoinDCX, I guess their goal ultimately, I think their tagline is, to become the go-to platform for crypto worldwide, which I think is most exchanges taglines, to be honest. Small goals. But in this case, just a small bit, I guess, about BitOasis as well. So they were founded back in 2016. They operate in the UAE, Saudi, Bahrain and Kuwait. They had a small bit of controversy last year when their license was temporarily suspended from Dubai's Virtual Assets Regulatory Authority. That has been since reinstated, and they actually only recently, I believe it was only last month, they actually secured a license from the Central Bank of Bahrain. So they're compliant from that perspective, which I'd imagine was a motivating factor for CoinDCX in terms of, you know, entering the MENA region. Obviously easier from a compliance perspective as far as that's concerned, and as well as probably motivated, I think, too, by India's regulatory environment, which isn't the friendliest as it pertains to the crypto side of things. So for those who don't know, India imposed a 30% tax on digital asset gains, and I think there's a 1% tax on crypto transactions. And generally, the Reserve Bank of India pressures banks to avoid conducting businesses with crypto firms. So not the friendliest jurisdiction as far as crypto traders is concerned. So yeah, in terms of acquiring BitOasis, I guess it aligns with its strategy in terms of targeting regions that have very clear regulatory framework for crypto operations, which Dubai certainly has. So that's the CoinDCX. Now just quickly look at Stride Ventures as well, and Malexi, who I mentioned earlier. We're coming back to them. So Stride Ventures, Indian-based venture debt firm. They've announced a $1 million investment in UAE-based Malexi, who Global Ventures led their pre-series A round back at the beginning of the year, back in January. They exclusively led that. It was $3 million investment. So the Stride Ventures, they earlier this year partnered with Hub71 back in February. So this sort of follows on from that. So I guess it's sort of their first steps in terms of supporting startups in the Abu Dhabi UAE startup ecosystem. And just a small bit about Malexi as well then for context. Founded in 2021, it's a risk management platform for small food and agribusinesses. So it just enables efficient cross-border trade. So it's actually a super interesting startup. I'll stop there for now.
Before we get into crypto and acquisition, congrats to BitOasis for this acquisition. It's an amazing story. Now, to finish up on the topic of the government support and the government initiatives to help companies, Hub71 and Abu Dhabi is really working hard to attract so many international startups and VC firms. And this is one of those efforts by bringing an Indian venture debt company to come to the region and make its first investment there. Reactions on this before we get into crypto?
First, it has two main things. First is the venture debt, because this is an instrument that can I say it's new, but it's relatively new to the market, or there's not enough abundance when you look at the traditional funding for the startups. I think this is critical. Venture debt is very critical for specific business models, because this is when you see a lot of challenges, especially people doing their product has an embedded financing in it in a way or another, or the business model, or anything related to the working capital, it's a challenge for the founders. And you see a lot of founders, they fundraise mainly for this, not to grow a product or to expand to a specific markets and all of that. So having this instrument, it is very, very helpful. And I think it gives a good breather to the founders and as well as to the investors on existing cap tables or future investment. And the beauty of this as well is coming from a market, I cannot say it's 100% like our markets, but at least they understand the dynamics. You know, it's not something that's 100% westernized and with the same credit mentality.
Yeah, I mean, it's an emerging market.
Yeah.
So a VC firm from an emerging market is investing in a company in another emerging market.
This will make it very relevant to them. So I think the structure or the offering, I think it'd be very useful for the founders and the expectations as well.
Yeah, and I really like your focus on having venture debt as another option for founders. We always think about venture capital or angel investments, but this is not the only thing. We have venture debt and we have revenue-based financing. And I've been looking at revenue-based financing for a while, and I've seen companies like Irad, Capify, FlapCap in Egypt, and maybe in Abu Dhabi or in Dubai. We have Flow 48. There are multiple options for founders to raise capital that's not necessarily equity. And we have other options, like in Saudi, I think we have 2 or 3 crowdfunding platforms, and we have one in Dubai. So crowdfunding now has multiple types as well. There's equity crowdfunding. Of course, there's the basic one, the rewards-based crowdfunding, but there's also revenue sharing. crowdfunding and debt crowdfunding. So there's a lot of options. Equity is very expensive. Whenever you want to raise capital, equity is the most expensive when you're losing shares in your company and control. Okay, let's talk about crypto. Youssef, I will start with you. What do you think about this acquisition? What does it mean for the region? Are we seeing more crypto investments now?
Yeah, I mean, I won't say we've seen a lot, like we've seen some. But I think with this news, especially, I think it's exciting and it's interesting because it's a very regulated, like, or it's a very difficult market to enter in the Middle East. Most governments like aren't supporting it. So with this news, it makes me like, it raises the question of whether, because the UAE are such big adopters of crypto, does it open like a door for like for Saudi Arabia, maybe seeing this news, will this like potentially pressure them to start to adopt something like this? It's a very difficult space, but like if international investors are now like acquiring businesses and investing in the crypto space, and it being a very like it's a growing market in the UAE especially, does it like will it pressure like other jurisdictions to start to allow it and to regulate it in a better manner? And I think this is like one of the main questions with this with crypto in general. Like it's always difficult to predict. You never know like how governments would react, but like as more investments are being made, I think it puts more pressure, or at least they might start to consider it in the future.
Zeina, we've seen this acquisition coming after BitOasis got 2 licenses, right? UAE and in Bahrain. Do you think that played a role in acquiring this company?
I like the structure. When we look at this deal, they have invested, like, I cannot say small ticket, but they invested at least small ticket to build, I believe there's a lot of investors do that. They build a good rapport, and this is something that we do as well. We build a rapport to see, and then with the potential of acquisition. And this is always about market expansion. You can see that because this is the perfect scenario of exit. Definitely, they have seen something on the operation, so they've been in this for a while, and it helped them in their due diligence, so they took the decision to acquire it. Having the Bahrainian, because when I love the Bahrain, interesting enough, Bahrain, they have a lot of tools, especially for the fintech and for the regulation, all of that, the sandbox, and they invested a lot to build a lot of infrastructure for this sector. So acquiring this license, it validates the product and validate whatever it is.
And as usual, technology always is ahead of regulations. And we've seen that with crypto and with even AI now, with self-driving cars. At least in the US, they're trying to regulate self-driving cars, AI, but they have been working on regulating crypto. And we've seen the approval of Bitcoin ETFs. And hopefully we will see something similar here in the region. Jamie, do you have any other news on crypto companies or crypto funds in the Middle East or in MENA region in general?
Don't, actually.
What I'm trying to get to here is we're not hearing a lot of news on crypto companies or crypto funds.
When you look at the mass numbers, especially the markets that actually mature for this, I think, correct me wrong, it's only 2 markets, maybe 3 in the region.
And let's not forget Malix, the other company that we talked about today, has a blockchain component. They are authenticating the procurement process with a blockchain solution. And in crypto in general, we have crypto, blockchain, DeFi, Web3. We have all of these names or verticals within this space that we just say crypto. And there are some companies who are working on technologies inspired or taken from that space, but maybe they're not promoting themselves as a crypto company.
Yes, yeah.
They're just using that technology. And I think the same thing is happening with AI. A lot of companies today are using AI technologies, but they're not saying, hey, we're an AI company.
But I think this is when people started to shift from being fintech to embedded finance, because something goes without saying. Like, you cannot say anymore, I'm a tech company, if in defining tech company is becoming like a commodity now. You have to have a tech component in product. Unless you are an innovative product, this is when you call you are a technology company. You know what I mean? So I think when it comes to, if it's an AI, it's something required, especially when you go with the big data and you start to give insights and working. It goes without saying, I don't have to say I'm coding with whatever Java or something. I think some things become normal. And it goes without saying just how I leverage this technology to reach the product or to reach the milestones that I have in mind.
Exactly. Okay, last but not least, Jamie, what's the third and last story for us today?
Yes, the third and last story. Let's take the opportunity to take stock, reflect over the last 6 months. The first half of the year is over. It's July now. We've had adequate time since the end of June, and let's maybe chat a small bit about what the first half of the year looked like from a funding perspective. So, I'll start off negatively. So there was a decline in funding. So definitely a cautious approach by VCs. So 46% decrease in total funding in the first half of the year. So 882 million in comparison to about $1.6 billion and the same period in 2023. But that being said, if you exclude $644 million of venture debt from 2023, the decline is 12%. So that puts a slightly nicer gloss on things. But despite that decrease, there was a 33% increase in investor activity, and there was a 130% increase in new funds launched as well. So look, I'm not going to go through, a lot of this is based on a report produced by WAMDA. It's fantastic. They do it on a monthly basis. This particular one looks at the first half of the year as well. I'm not going to go through absolutely everything in enormous detail. I'll give you a slight sort of whistle-stop tour, I guess, of some of the particularly interesting takeaways and things to take note of. In terms of transactions, UAE and Saudi continue to lead the way as far as transactions and funding is concerned. I guess the attention grabber for me, at least reviewing the report, was, Egypt's startup ecosystem, saw a drastic decline. 33 startups raised 83 million, an 80% drop from last year. Presumably the, economic climate, high inflation doesn't help. As far as that's
And
concerned,
luckily, we have people from Egypt
I was
asking
gonna
about this.
say.
But before we ask them, I have a question for you, Jamie. So, according to those two news pieces or stories that you sent us, I've seen there's a conflict between the numbers.
There is,
and one of them, Saudi is the top, and the other one, UAE, is the top, and there's this competition between Saudi and UAE. Which one do you think is more accurate?
I am inclined towards the UAE figure based on what I've seen. I'm not entirely sure how they arrived at such a conflict between the figures on one level, because there is quite a discrepancy. But I would probably be inclined towards the UAE figure produced by WAMDA. Now, that being said, I do know that in the WAMDA report, certain investment sizes aren't disclosed and estimates are provided for the size of some of the deals. But that being said, those deals are generally at the lower end of the spectrum, so I don't really think that's going to account for the discrepancy between both reports necessarily. So look, take your pick on one level. It is strange that there's that discrepancy between two, reputable sources. The other article was based on a report compiled by Magnet, the data research company. So it's peculiar. But look, at the end of the day,
both are great companies. I agree with you. Both are reputable companies. And I think the difference would be one or two companies with big rounds that were, was captured by one and not by the other. I'm not sure. Maybe that's the case. But we have on one side WAMDA, a great news company, and Magnet, a great data company.
So yeah, in terms of sectors, if we look at that, PropTech has dethroned FinTech. First time in a while, I believe that's probably happened. So PropTech emerged as the most funded sector with $200 million across 14 deals. I thought particularly interesting was the sort of decimation of the B2C model in comparison to B2B. So B2C was down about 64% decline from last year. B2B up 153%, so quite a swing as far as that's concerned. On the gender disparity side of things, unfortunately typical as far as that's concerned. Female-led startups raised only 1.8 million across 15 deals, down from 6 million the previous year. Male startups, on the other hand, 760 million across 170 deals. In terms of exits, we saw a 63% drop on the first half of 2023, so only 10 exits over the course of the last 6 months. And then if we just look at the regional and international investors front, Saudi-based VCs were the most active, followed by UAE and then Egyptian, and the US was the leading foreign investor. They had 31 investments in startups, followed by the UK with 19 rounds. And look, if you were to put a positive spin, which the report does in terms of the outlook for the next half of the year, it sort of, it suggests that this could be interpreted as a consolidation period, for market sentiment assessment. And, several VCs have launched new funds. I guess Global Ventures was one of those examples, and I'm sure they'll be deploying capital over the course of Q3 and Q4. Fingers crossed.
Okay, thank you, Jamie. What's happening in Egypt? Why this big drop? I'll start with you, Zeina.
It's tricky, actually. I think there's multiple components, because if you look statistically wise, first, globally, things are going down, and then the region is definitely slowing down, automatically cascaded to Egypt. This is the external factor. And then if we look at quarterly, usually, at least I might be wrong, but if we look at Q1, usually it is the highest one, and from funding, and then a little bit of Q2, it slows down, and then it picks up Q3 and Q4. This is the biggest funding you always see starting from September and all of that. What happens is the factor, like simply having it affects Ramadan, and we're having a lot of vacations and summer, all of that, it slows down a little bit, the activity. Again, with the ambiguity of the financial and the devaluation situation. It is something that affected a lot of people. People started to, not to say that I'm not investing in Egypt, but people will start re-evaluating, especially if you have a portfolio companies. Makes sense that you prioritize to invest in the portfolio companies and support them and see how it works. And at the same time, when you decide to invest, especially if you're a foreign investor, this is a challenge, because I will be honestly, it's a question that even if I invest, how I will get my money back? Even if there is an exit, how I'm getting my dollars back? This is what a lot of people, if they don't understand what's happening internally and what is actually the challenge, because what has been reporting is a different, I'm not saying there is misreporting, but people, if they don't understand the dynamics of the market, and they are from an external region, this is definitely the question. It will be easily, let's hold to see what's going to happen. And this is what happened. The actual devaluation happened. I think this is when sort of things will get a little bit better. We have to agree, Egypt, it has a huge population. There is a lot of opportunities. If you looked at it, the devaluation, it's a good opportunity for external people, because things are becoming cheaper, even with the inflation. Yes, I understand it's high and everything. However, it is still on the cheap side. So, and you have a good talent, and there is a lot of attributes that could make it a lucrative opportunity. There is a lot of risks, but I think with the new steps that we have seen, things with the government and with the foreign investment that's happening and all that, this will lead to a little bit to stability, not the right way. This is not a switch on and off thing. But I think whoever will look at opportunities now in Egypt will be very cautious on specific business models. You will not see it, a lot of business model maybe will get affected by this. And I think it will be very, very challenging for companies on raising post-Series A, because this is when you require international investors or regional investors. I don't think the local funds will be able to accommodate all of that. Maybe exceptional, but will not accommodate all the population. So this will be a tough sell to the founders to go to the external, but they do that.
Youssef, what do you think? What's your take on this drop?
Yeah, I mean, echoing what Zeina said, to be honest, like it's I think the drop at the first 6 months mainly lies down to the uncertainty regarding the devaluation. Like inflation was skyrocketing, so it was not the best climate for investment to be made. But I think looking forward within the next 6 months, I think we're gonna start to see a period and we've seen for the past 2 months since we've received more FDI and the fund from the IMF, and things are starting to stabilize a bit. So my outlook for the next 6 months is a lot more positive. And I can speak from at least our intention, like Egypt Ventures and Falak startups, like definitely their intention is there to invest. So definitely for the future, like I think it's positive.
Yeah.
Hopefully.
We actually, as us, we're closing, it will not be announced yet, but we are closing 2 deals in Egypt as well. So and one of them
Great.
is PCC. So something.
Great. So yeah, on your positive note, Youssef, you said looking forward, it's gonna be more deals in the future. And this is proven by the fact that we've seen 33% increase in investors and 130% rise in new funds. So it seems there's more capital coming to the region, to our startups, and hopefully this will be deployed in the next, I don't know, few years. Why did we see more investors raising more capital now? I know 2023 was the VC crunch in the world, but in the US, in MENA, and in Saudi specifically, we've seen a lot of companies raising more money, but we didn't see a lot of VC funds raising more money. Are we out of the VC crunch now? It seems that 2024 is a big year for VC funds. It seems they're raising more capital. What do we think?
Yeah, I think especially because investors, like, besides, like, take away the economic situation and the chaos that's been happening for the past 2 years, I think investors see the value in the Egyptian market and in the MENA region. Like, there's such a big population, that we have such a talented like workforce. The majority of the population is are young people. So there's such huge potential in the Egyptian market, and with economic stability, like, great things can happen. So I think investors see this, and seeing that things are starting to stabilize a bit, more funds are going to be launched, and I think more investments are going to be made, definitely.
Well, I wish we had more time. I have so many other questions that I didn't get to ask, but we'll have you some other time on this podcast and an upcoming episode. Thank you so much, Zeina and Youssef, and thank you, Jamie, as always.
Amazing. Thanks, Youssef. Thanks so much, Zeina.